Hey everyone, Lance here, and I'm looking bearish because I can't find a barber, anyone to cut my hair, and I'm feeling slightly bearish, actually. Now, I know you're thinking, hey Lance, you're crazy. The S&P is up 7.5%. Why are you feeling bearish today? Well, I want to show you why and pull up the examples of the S&P and of the VIX volatility and looking at some VIX products. In my opinion, markets are broken. Now, we can debate, and I know we talk about this in the members video for Blitz, and in detail we will this week. What's causing this? Coronavirus, the Fed. Now we can't decide on the relief bill. So many factors. Everything. So much going on. Congress, insider trading. Craziness in the world. But the S&P made a new low yesterday, crossed 2,200 to the downside. It was down about 3.5%. And the VIX, okay, this is what's crazy. The VIX is tanking. The VIX yesterday, with the S&P falling, the VIX fell about 16 points. Now, how is that possible? Lance, if S&P goes down, VIX goes up. And if S&P goes up, VIX goes down. Well, the VIX is down 4% today with the S&P up 7.5%. But why is the VIX up $15 from the low today? The S&P has just been going up all day. Why is the VIX rallying so much, right? Look at that. Look at the VIX rally. Now, look at the S&P. The S&P's been rallying all day. How is this possible? What does this mean for your trading and for your options out there? Well, if you bought calls, are you happy? Oh, you're darn happy. You bought S&P calls, but are you happy to the point where if you buy, let's say, SPY April call options, which is the S&P, the SPDR ETF, and you get a 7.5% move, $16.50, and your call options are only up 114%? That's it? Or if you bought, let's say, American Airlines and the stock is surging today, I mean, it is. It's up 33%. And the front month, April, so you really had to time that good, are only up 123%. If you bought May, you're up 72, 73%. That's it? Lance, how is that possible? If you bought call options in the S&P or American Airlines, let's say just a few months ago, and the stock was up 3% during this period, you'd double your money. If it went up 10%, you'd quadruple your money. Why? Why such a little movement in the options? Now, don't get me wrong, 100% is fantastic. But again, you're catching a 33% move in AAL. Look here. Look at that implied volatility. That is the price of the options. It's tanking. It is tanking. And it's been going down now, even when AAL made new lows and was still going down, red days. The market makers are doing this. They got caught off guard. They lost their butts off on the decline for the coronavirus because the market makers, again, they sell options, right? So now what they're doing is they're jacking up option prices so much, or they did, I should say, just up until a few days ago, that if you wanted to buy calls, if you wanted to buy puts, guess what? You were going to pay extra. You were going to pay a hefty premium. Now, what they can do is say, look, even though we're having wild moves, we're just going to crush the volatility out the options so we don't lose anymore. Those people who bought those expensive options, look, even if they're right, even if they get a 33% move to the upside, who cares? They're just going to double your money. That's fine. And if the stocks start acting flat, you know what's going to happen to the calls and the puts? Well, they're just going to drain. We call that an IV drain or an IV crush. And I'll show you an example. We'll pull up Walmart. Walmart's been acting fantastic lately, right? It's been holding up quite well. It's down $1.16 today. Now we'll go to the April options in Walmart. The calls are down, right? That's expected. Walmart's down $1. The calls are down anywhere between 16 to 28%. But the puts, well, guess what? The puts are down 6%, 5%, 8%, 7%. How? But Walmart's down. How are the puts down? You really need right now, if you're buying puts, even if you're buying calls, you need massive moves in the right direction, okay? It's not a game like it was anymore where you can buy puts, stock goes down, boom, you crush it, you make a fortune. if you buy puts, and I think you buy puts on big green days, you really need that stock to tank. If you buy calls, and I think, again, you buy calls on big red days, you really need that stock to rally. Again, we just saw with AAL, that was a 30% move. You really need large moves, okay? It's not like how it was just a few months ago. You really need these greater than expected moves. Now, if you're saying, Lance, I'm scared, I'm terrified, I don't know what to do, A, you don't have to do anything, but B, what you can do, if it's in your risk, is you can sell premium. You can sell options, bear call spreads, bull put credit spreads, iron condors, iron flies, as a way to make money on volatility getting crushed, okay? Now, that's a little more advanced out there, but I just want to give you examples and options out there, what you can do in this market, because I totally understand. It is tricky right now. Every day, it's up, down, up, down, up, down, and you're having to be glued to the TV and say, oh, what are we doing now? Who's speaking on? Is Steve Munchkin Man speaking? Is Kumo speaking? Is the president speaking? Listen, that's stressful. You don't want to trade that way, okay? Right now, if you are actively trading, scale down that size, widen those stops, okay? And really, really look at risk management in all your positions, because we can go up, we can go down. I don't think there's any clear signal just yet in anything, because what we're seeing in the global markets. Let me know if this video helped you out. Blitz members, I'll get the big video up for you Wednesday. And everyone, happy trading.